This week in economics on the 1st of September 2019, our first program for the month of September. This is a holiday weekend in the U.S., so thus we'll have some of the various signposts, we'll call them, are not available, or they are not available. People are on holiday this entire weekend. Nonetheless, from WBRN Radio and on the Bostonred Network, this is a numbers man here in the Jerry Pippin Memorial Broadcast booth, and as normally we partner with Cranston Analytics for some of our insights into the world of macroeconomics. We'll start out here with, where will we start? We'll do the yield curve, and we'll look back at the yield curve. The yield curve is still basically where it was. It was inverted and has been inverted for a period of time here. So we'll take a quick look at it. It was on the 27th, but nonetheless, this is from Reuters. Richard Leung is the author of this article. U.S. Yield curve inversion deepened. That was on Tuesday. That would to levels not seen since 2007. And we keep referring to 2007 as to what is going on in the U.S. Now, that was the beginning of the Depression. When we look at 2007, 2008, the Depression was here, or severe downturn, or whatever you wish to call it. And let's see if we can get back. Oops. Get back here and take a quick look. The 28th. Okay. That is where were we? All right. So we're in the right week here. Oh. Wait a minute here, just a second here. We need to do a couple of things here to figure out where we are. Anyway, nonetheless, yes, we are good, as they say here, to make sure where we were. Sometimes things get stuck. And anyway, we're not stuck. So thus, the fears of a what they call a looming recession has spurred a sell-off on Wall Street, and has stroked even more safe haven demand for government bonds. Here, the intense interest in government bonds supported demand for $40 billion worth of 2-year government debt for sale, part of this week's $113 billion fixed-rate Treasury supply. The yield curve often inverts prior to a recession. Well, that's been talked about here, and again, a caveat there. It doesn't mean that it always will. As the curve inverts forward, it inspires more long end buying. It's from Mike Lazaro, head of Treasury trading at Manual Life Assets Management in Boston. The Treasury Department sold its latest 2-year fixed note supply. The yield on it was 1.516%, which was the lowest rate of any auction of its maturity since September 2017. The Treasury will sell $41 billion of 5-year notes on Wednesday, and they've already been sold by now, followed by $32 billion auction 7-year debt on Thursday. It will offer $18 billion in floating rate notes on Wednesday. On the open market, the 10-year Treasury yields were at 1.448%, down 5.60 basis points on the day. They reached a 3-year low of 1.443% on Monday. The yield for the 2-year note were at, and this is where the inversion is, at 1.531, down 2 basis points on Monday. Then the decline to 1.449% of the lowest since September. Again here, 3 major Wall Street indexes were also down. The spread on the 3-month T-bill over the 10-year yield grew as wide as 52 basis points, a level not seen since the Depression. The deepening curve inversion reflects investors' nervousness about a recession and, of course, uncertainty about the China-U.S. trade situation. Incidentally, on the first, more goods from China were placed on the list of tariffs. And again, this is from J.P. Morgan. A survey by J.P. Morgan suggests blistering demand for treasuries has tapered to a tad as a share of investors who say they were neutral on long-dated U.S. Debt grew to 54% on this week, on Monday, up from 49% there. And if I can look at this, we're up about 5%. Data from the U.S. Consumer confidence weakened a bit in August, and we'll get to the conference board here. Even though consumers' optimism on their present situation hit the strongest level since 2000, some contradictory things going on here in terms of where confidence is standing there. So let us move along here, and we'll see if we can. Okay. We will go to the conference board here and get the latest. We'll dive in here very, very quickly. Short business week. The conference board's consumer confidence index declined marginally in August, following a rebound in July. The index now stands at 135.1. 1985 equals 100, down from 138.8 in July. The present situation index, based on consumer assessments of current business and the labor market, increased from 170.9 to 177.2. The expectation index, based on consumer short-term outlook for income, business, and labor markets, declined, and this is one we look at more so than the present situation there, from 112.4 last month to 107 this month. Consumer confidence is relatively unchanged in August, following an increase in July. That is from Lynn Franco, Senior Director of Economic Indicators at the Conference Board. Consumers' assessment of current conditions improved further, and the present situation index is now at its highest in 19 years. In November of 2000, remember November of 2000, we were in an election year, and then of course G.W. Bush took over, and he informed the public that they were in a recession. That is 179.7. Expectations cooled modestly, but overall remain strong. While other parts of the economy may show some weakening, consumers have remained confident and willing to spend. However, if recent escalation of trade and tariff tensions persists, it could potentially dampen consumer optimism regarding the short-term economic outlook. Now, this is very interesting. Going back to 2000, for those of us who were around doing this in 2000, that was the year that we had a presidential election, very important one. It went down to 500 votes plus change in the state of Florida. G.W. Bush was declared the winner by the Supreme Court, literally, over Albert Gore of Tennessee. And away we went, as they say, on a roller coaster, and into a recession. By the time G.W. took office in 2001, the U.S. was in a full recession. So this is probably not a good historic marker. Monthly consumer confidence surveys based upon probability design random samplings conducted by the Conference Board by Nielsen, a leading global provider of information and analytics around what consumers buy and watch. The cutoff date for preliminary result was the 16th of August. Consumer assessments of current day conditions improved in August. The percentage of consumers claiming business conditions are good increased from 39.9 to 42%, while those saying business conditions are bad decreased from 11.2 to 9.8. Consumer appraisal of the job market was also favorable. Those saying jobs are plentiful increased from 45.6 to 51.2, while those claiming jobs were hard to get declined from 12.5 to 11.8. Now, one has to look at the number of people, a small number of people that felt that jobs were hard to find because they see at least anecdotal evidence out there, but the higher signs are out. But many of these jobs are lower paying jobs. Is part of the problem right there. Consumers were moderately less optimistic about the short-term outlook in August. The percentage of consumers expecting business conditions will be better 6 months from now declined from 24% to 21.9%. An important figure there, while those expecting business conditions will worsen, increased from 8.4% to 10%. That's still a very low percentage in this survey. Consumer outlook for the labor market was also slightly less positive. The proportion expecting more jobs in the month ahead of decreasing marginally from 19.9% to 19.7. That's 0.2 of a point there, while those anticipating fewer jobs increased from 11% to 11.1 actually to 13.6 regarding their short-term income prospects. The percentage of consumers expecting an improvement decreased from 24.9% to 23.8%. However, the portion expecting a decline from 6.6% to 5.8%. Now, this is improvement, the first figure that we gave you. Nonetheless, this is the Conference Board on Consumer Confidence Survey for August 2019. And again, with Nielsen there, Nielsen was a company that at one time was known for its TV viewers. Now it's a global performance management company that provides a comprehensive understanding of what consumers watch and buy. Nielsen's watch segment provides media and advertising clients with total audience measurement services for all devices on which content, video, audio, text. So I assume they are looking at us. It's an S&P 500 company. Has operations in over 100 countries, covering more than 90% of the world's population. So that is them. Whereas the Conference Board it was founded in 1916, been around a long time. A nonpartisan, not-for-profit entity holding a 501c3 tax exemption in the U.S. So it's the conferenceboard.org. They actually don't have anything in the skin in the thing, so to speak. Let's take some other little looks here. We're run by CNBC and see what CNBC has this time around. A little more information on the tariffs here. This is wrapping up a volatile August. The Trump administration tariff on 112 billion of Chinese imports hits at midnight, and 15% more expensive. They were at 10. The 5% he added to import everything from milk to diapers to sports equipment from China. And this is one of the big updates there. Ray Dalio warns of serious problems. A bond blowout as repeated in the late 30s. He's always reminded people of things to come, and they in fact do appear. Look at some of the stocks. This is MSNBC. I guess we can give these while we're here. Some of the top moves: Western Digital they were up 3.976. The Dollar Tree 3.52. Campbell's Soup 3.902%. Resorts up 3.60 there. DuPont is up 3.28. Those are movers on the market. And people who are not moving as well at the bottom of the scale there, we'll just name Marathon Oil Company at a negative 2.951. Estee Lauder at negative 2.76. Basically all what we see here making a big move. Anyway. Campbell's Soup's a consumer product. Take a little look, see here at Campbell's Soup, and let me move along here. I guess since Labor Day is coming up, we'll do this in more than one broadcast, but we'll look at the international situation here as we roll along. Argentina imposes currency controls to support the economy. Argentina has imposed currency controls in an attempt to stabilize markets as the country faces a deepening financial crisis. They're in a recession and going downhill. The government will restrict foreign currency purchases following a sharp drop in the value of their peso. Firms will have to seek a central bank permission to sell pesos to buy a foreign currency and make transfers. Argentina is also seeking to defer debt payments to the International Monetary Fund to deal with their crisis. And on Sunday, the government said that it was necessary to adopt a series of extraordinary measures to ensure normal functioning of the economy, sustain levels of activity and employment, and protect consumers. The central bank said the measures were intended to maintain currency stability. It also said that while individuals can continue to buy U.S. dollars, they will need to seek permission to purchase more than $10,000 or 8,223 and 50 cents of the English pound, and that will apply the rest of the year, at least at this point in time. Argentina, of course, has been struggling. This is a BBC dispatch. The peso fell to a record low last month after a vote showed that the business-friendly government of President Marcy is likely to be ousted in October elections. He was elected in 2015 on a promise to boost the Argentine economy. With a number of so-called liberal economic reforms, the country is in a deep recession. It's going towards depression here, actually. It has one of the world's highest inflation rates, running at 22% during the first half of the year. The Argentine economy contracted 5.8% in the first quarter of 2019 after striking 2.5 last year. 3 million people have fallen into poverty over the past year. And various anecdotal stories about people keeping money buried in gardens, hidden in walls, and even stuffed in heating systems. Occasionally, of course, with disastrous consequences. I can figure that one out. Anyway, the companies compared previous crises. The $10,000 transaction is certainly generous in compared with past action. People still have bad memories imposed. That was in 2001, which stopped all withdrawals of dollars from bank accounts for a whole year. That was called the Corralio. Anyway, the most serious attempts to wean Australians off of dollars dependency dates back to 1990 under President Carlos Medina, when the peso value was fixed by law at parity with the dollar. Anyway, so the Argentines have been through this before. The country is struggling to stave off the fifth debt default in 30 years. Last week it was seeking to restructure its debt with the IMF, one of the big problems that countries like Argentina have. It would give the economy more time to pay back the money. So the IMF rating agency, Standard & Poor's, Fitch, decided that the amount to default or downgrade of the country's ratings. Whatever happens in Australia, the risk of financial contagions. And this is one of the things that you look at in emerging economies, and also could disrupt part of the U.S. economy much more so than the tariffs. The rest of the Latin American market are unlikely to suffer the U.S. China trade war and a slowdown in global growth are much more of a threat. Well, yes and no. Contagions could come out to the Argentine economy. It's a fairly large economy, and of course then we look to Brazil. So we have a number of things going on at the same time period there. And let me just jump over to the hurricane that is moving into, or has already hit the Bahamas. That's Dorian, and it's on its way to Florida. Very slow-moving hurricane with economic consequences. We'll have more on Hurricane Dorian on the political side, Boston Red, as we move merrily along. So let's quickly move along once more here. Looking at some of the happenings in business, basically coming out of there. Factory output falls in the UK at its fastest pace since 2012. That was last month's survey there. We had a lot of information on the British economy. The last report of This Week in Economics referred back to it, some of what actually went on there. But the British economy has got problems because of the problem there with the British economy. You have more or less a recession coming very close in the UK and Germany also. So those are things we need to take a closer look at, not be so fixated than the tariff war. Yes, the tariff war would be there. An example would be Apple. Apple and its supply chain. You don't hear the word supply chain, but Apple has a very efficient supply chain, and it's based in China. Hundreds of different enterprises make components for Apple's staple iPhones and various other devices, and that is all in China. Now, the suggestion by the administration that these various companies move out of China is not as easy for organizations like Apple that have severe supply chain organizations. This is sort of the argument, a little different argument in 2009 when Barack Obama took office as president. And in the campaign of 2008, Willard Romney wanted to basically let Detroit fate move on its own and not support any bailouts for Detroit. The problem there was a supply chain. The various suppliers that supply these automobile manufacturers, not only Detroit but other places in the U.S., had the GMs, the Fords of the world fell, and Chrysler, that supply chain would have also collapsed, and thousands, 100,000s of jobs would have been in jeopardy. So this in itself is a very, very serious situation. What will Apple do? Well, most of Apple's products are at a premium. Therefore, this latest increase, they will probably absorb it. But the question is how long they can absorb it. What they've been able to do is lobby, we used to call jawbone, the Trump administration into exemptions. But now the exemptions are not there. And of course, you have other sectors of the economy are complaining when some sectors get, quote-unquote, what's called special treatment. So this is the whole situation, and at the same time, you have China placing, I believe, a 5% tariff on petroleum product. This whole concept here, it's economic violence at its best, no doubt about that. Will China blink? Well, it will depend. Obviously, the longer it goes on, China will make adjustments. And they are, of course, making adjustments now. They have a controlled economy. there, and they can make these adjustments. Yes, their GDP will fall. Exports income will fall, but they have, 1.2 or 1.3 billion people internal economy to tap into. They have to change some things, and that is happening all over, becoming a more self-reliant economy. If you look at Huawei, and Huawei's now went to its own operating system on their smartphones. So European sales dropped because in Europe they are used to having the standard applications there, Android. One of the things, we've talked about this on the open source report, another part of the Bostonred Network's family and WBRN, Google will switch from Android to a system called Future, an operating system, and named after a Japanese flower. And when that comes in, Android will disappear. Now, it doesn't mean the support for Android will disappear. It will change many things. So we have to look at it a little bit differently of what's going on there. And we will have an open source report this week, and we'll talk more about China and more open source activities. Economic contagion, as they're called, can move companies to enterprises or whatever in countries to more of an open source and sustainable development situation. So this is one caveat here. Let me just go to, and we'll do the numbers here. It's a shorter report. We'll start with the BBC, and then we'll switch back over to CNBC, and I believe also some of Reuters. Nonetheless, this on the in September here, actually September 2nd, this is September. Anyway, the FTSE at plus 1.38%. That's the FTSE 100. There, the change there is 99.56% positive. In Amsterdam, they're at plus 56% or 3.15. There in Paris at 16.37. Everywhere's in positive. The DAC at 41.01. The Eurostasi at 12.54. And in Madrid they're at 35.80. Cinex, that's in bumped at 263.86. In Hong Kong, of course, they're closed there in the negative at negative 98.18. Demonstrations go on in Hong Kong. There was students on strike there. It was a call for a general strike, and evidently last reports didn't go as well. The Nikkei at a negative 84.18. And now let me jump back up to the North American markets. The Dow at 41 point, not NASDAQ at a negative 10.51. The S&P 500 at 1.88. This is the BBC part of the deal. And let's back up a little bit here, and we'll go over. Let me see where we're going here. The Russell 2000, we don't get them as much, but the Russell 2000 at negative point, not 13%, are negative 1.88 there. The VOX, where's the old VOX today? At 18.98, and it's up. That would be plus 6.15%. The VOX. This is from CNBC of their little roundup here. We've already given in the NASDAQ, the S&P, the S&P 500. Let me just back up and over to Reuters. I think we gave the bond yields here, but the 10-year, yeah, we did give the 10-year at, this is U.S. bond, incidentally, at 1.449. And the Japanese 10-year is at a negative 0.3, negative point not 1. I forgot to give the Brent crude was down 20 cents. Brent crude futures, that is, at $59.05. gasoline prices in the U.S. also been going down. And on the West Texas crude, intermediate, what do you want to call it, was down 4 cents at $55.06. T-Boone Pickens is still jumping for joy in retirement. He remembers $20 oil. Anyway, gold has finally went down. It was down $10.10 on the Forex at $1,526.55. And let me see what else is here. That was PM. Well, we'll get PM. It's down $11.80 at $1,528.40 is what happened to gold. And natural gas is also 0.1 cents there. That's futures, that is. And all the currencies are pretty much, we look at euro at 0.020. And the yen, they're all up. It's up, actually, the euro is up 0.25%. Actually, $1 will buy you 0.91118 there of euros, and how many pounds did it buy? Well, point direction there. So anyway, those are some of the currency problems. So we did exhaust that in a pretty good fashion, actually. Let's see. From Reuters. So we approached this from several different ways. Sometimes you have to do everyone, as they say, in the picture, so to speak. Now, let me see. Make sure we don't miss anyone here. Back to CNBC once again. I think we looked at this. We got the market movers, who is doing what and who is going where. Incidentally, Kmart is continuing to close some of their retail outlets. We're going to probably see much more of that. Note, this is CNBC. Chick-fil-A is leading Popeye, McDonald's, and KFC in the chicken wars. Well, never did Chick-fil-A, but anyway, strange type of situation there. Again, 92% of apparel imports from China will be hit with tariffs, and okay. Well, that it becomes, I guess, final note on that, it becomes one of many, many things that adjustments are made. Supposedly, the tariffs were given a hiatus for the school buying season. Back to school buying used to be a very, very significant retail sales date. It's not anymore, and part of the reason for that, obviously, is the Amazons of the world that people can buy at, I guess you'd call, convenience shopping going on there. Nonetheless, this will end our report. And the summary, of course, was it was a volatile August. What will we see for September? Will the Fed increase or decrease interest rates 25 basis points? They had Jackson Hole, no change was there. They, of course, will be monitoring the economy. And then by the next program, we probably will get in some data from what happened in Florida and the Mid-Atlantic as far as damage from Dorian. We hope to get that. Nonetheless, for those in business, make this week a productive one, and it's a 4-day work week in the U.S. here and a full week elsewhere. And also for the consumer, obviously the eyes are on the prize. There's some of these retail outfits that are going out of business. We'll have going out of what we used to call going out of business sales. And we also, the retail Walmart has been decreasing their footprint also, and it'll be interesting to see where all that goes. Workers, of course, are losing their jobs, and we still have a standoff, the last time I checked, in Kentucky with miners trying to get their last paycheck.